We're excited. You're going to learn how the wealthy are actually leveraging other people's money to be able to enhance their wealth.
I would just ask the client in my first meeting and say, what are you doing to create tax-free income? And no one ever had an answer.
Here today, we got Mr. Daniel Wachs.
And if you're in the high net worth space, Roth's never an answer because they make too much money.
Tell us a little bit more of what does that even really mean?
It's a way of funding something but using other people's money. And people understand that, right? They borrow money to grow their businesses. What they're doing is creating massive tax-free income using other people's money, but like you said earlier, not everyone qualifies. This isn't a strategy for everyone. It's a strategy for less than 2% of the population.
So when you say $1 million, right, in tax-free income, is that $1 million one time?
Annually.
$1 million annually for how long?
Until age 100.
So they would get $1 million annually until age 100.
Yeah.
That's powerful.
So if you wanted to do that, this is what you got to do. That's why you want it to be part of their overall plan. I think most business owners, their best investment is always in their business, myself included. If I invest in my business, I get my best return. What we're trying to do is say, yes, keep doing that, but instead of you funding what I'm going to show you, I'll get a bank to fund it for you.
Like, what does that mean?
Yeah.
Are the banks paying for this? Are they not paying for this? Or is the client paying for this? How does that work out?
Whatever your contribution amount is, I'm going to have a lender put in 5 times as much money. So if your budget is $100,000, I'm going to have the bank put in $500,000. If your budget is $200,000, I'll have them put in $1 million. That's how the strategy in the simplest form works, which is better than what they've been able to do through traditional planning.
What do you think is the biggest reason that most people will say, yes, let's do it, let's move forward with this?
I think there's 4 reasons. First one is that I do a lot of philanthropic planning, estate planning. If I can create a death benefit that starts at 10 million, grows to 35 million, it costs you $1 million, that's a great way to leverage what you're trying to do, whether that's for a charity or whatever. Creating tax-free income. That's the one thing I found is that most of the rules and the good things like Roth strategies, all these things that are tax-free, if you make any type of money, you can't do them. I mean, they don't let you do it, or there's restrictions on it. So this is a way to have almost like a Roth concept, but no contribution limit. So 5 million net worth, business owners, professionals, athletes, real estate people. I work with a lot of doctors, lawyers. Those are the type of people that we're working with on a regular basis. If you're only doing this once in a while, you're not going to get as best rates as I do. I mean, if I have almost $1 billion, I'm going to probably get better rates than you. I mean, that might be 1 week's income, or whatever. Whatever. See, this is kind of interesting. What would that look like on me? Now you're moving, and let them make a decision, because they'll make a decision if it makes sense for them, but what's the highest and best use of capital?
What is up, guys? Welcome to Steps for Success. We have an amazing guest here today, and today's conversation is all about the wealth strategy that the banks are financing for the top 1%. You're going to want to get in on this. So what are the strategies that the top wealthiest people, the top 1%, that they're actually using to be able to create and continue to grow their wealth that the poor and the middle class haven't heard about, learned about, thought about? Today's conversation is all about that. My name is Karl Smith. I'm the founder of Next Level Success. And here with Steps for Success, we're all about empowering entrepreneurs, business professionals, sales leaders to be able to become greater leaders in their field so they could take their businesses to the next level and create even more success. And today we have a very special guest, Mr. Daniel Wachs, who's actually going to be sharing with you guys the strategies that he actually talks about when he's actually communicating with the top 1%. If you're a high net worth individual, or if you're someone that's aspiring and planning and working towards becoming one, you're definitely going to want to become a part of this conversation. Stay tuned. So wealthy people are getting richer, poor people are getting poorer. What's the difference, right? A lot of times we hear people get frustrated all the time and they say it's not fair that the wealthy continue to get even more wealthy. They're taking advantage of strategies that the rest of us never heard about. Some of us even feel like these people are cheating to be able to create wealth. And then you have people that are sitting there and they're struggling, and you're working a 9-to-5 job. Most of your money is getting paid for bills or taxes, and people are running around without any clue as to what they can do to better secure their financial future, how to actually make it and grow into the top 5%, the top 3%, the top 1%. So what's exciting is that in my journey into entrepreneurship, I learned a long time ago that creating success, creating wealth is all 80% psychology, and 20% of it is the mechanics. And this is actually really good news, because 80% of winning, if you take a look at any book, you take a look at any of these entrepreneurs, any of these experts, any of these people that have accumulated wealth in their lifetime, they will actually tell you that there's actually very little that they needed to learn, right? 20% of the mechanics is actually very minimal, and anyone could learn it if they were actually committed to learning those strategies over the course of their lifetime. But 80% of actually creating wealth in your lifetime is all going to come down to your psychology. What are your habits? What are your behaviors? What are your disciplines? What is it that makes sense to you? And what's your mindset around that whole thing? And what are you willing to do about it? And so you have an 80% chance at making that change in your life, but we got to get to that 20%. Okay, and so here today, we actually have a very special guest, Mr. Daniel Wachs, who's actually going to be talking to you as an advisor, and he's not your financial advisor. Everything that we're going to be talking about is going to be the opinion of two people having a conversation, but this is not financial advice. We are not your financial advisors. Make sure to get with an expert, a licensed professional, so that you can get the appropriate information structure you need for your specific situation, because everyone's needs, everyone's goals are all 100% different, okay? Now that we got that out the way, I'm excited to introduce our guest to you here today. So just to give you guys a quick little insight and introduction, today's guest is actually Daniel Wachs, and he's a premium finance specialist. He's the founder of Perpetual Wealth Management, and he's been in the insurance and financial services business now since 1995. He's been focused on premium financing for the last 15 plus years and is a national vendor for premium finance strategies, representing multiple life insurance carriers and finance lenders. He's funded over $2 billion of death benefit and over $750 million of funded and committed capital loans for his clients and multiple lenders. He works around the country with clients and with partners, and he speaks at many industry events while focused on estate and charitable planning, on business planning, supplemental income planning for his clients. Daniel works and lives in Chicago with his wife, Anna Marie, and his 3 children, Isabel, Alexandra, and Andrew. We actually have Andrew here in the building today. So shout out to Andrew for showing up here today. But we're excited. You're going to learn how the wealthy are actually leveraging other people's money to be able to enhance their wealth. So here today, we got Mr. Daniel Wachs. Thanks so much for being a part of the conversation, sir.
Thank
we
you.
appreciate having you here today.
Thanks for having me.
All right.
Appreciate it.
So why don't you go ahead? I gave a little bit of insight as to who you are and what it is that you do, but from your mouth to their ears, just tell us a little bit about yourself.
So I started in 1995 in the business. It tells you how old I am. I've been doing this for a long time, but about 15 years ago, Karl, I really got interested in financing. I was playing golf with one of my friends who was a doctor and a surgeon, and I had my own planning practice. We sold annuities, investments, insurance, all that for a long period of time. But this person said, I'd like to do a plan with you, because he went to one of my programs, and he said, I'd like to do like $750,000. So I'm thinking, okay, if he wants to 750, that's 5 years of funding, 150 a year. He goes, no, I want to do 750 a year. So I'm thinking, oh, this guy makes pretty good money. But I got to figure out a better strategy, because to fund an insurance policy with $750, he would have to earn about $1.2 million to fund that. So I had to figure out a different way, and that's where I started doing the financing. So I started in the insurance business in 1995 and had my own planning practice for a long time, but then really went into this niche of helping advisors, helping entrepreneurs with strategies that most people have probably heard of, but they don't put it together like we put it together, to help them with their finances and to grow their capital.
Yeah, I think most people have not even heard about this stuff. And as licensed advisors, sometimes, we run into people that might have heard or seen, not everyone, but in my experience, actually, when I get outside of the investing side, and you're talking average, regular, everyday people, yeah, most of them don't even know that this stuff exists.
No.
So that's pretty insane. So when it comes to create leverage to basically continue to grow their wealth, Tell us a little bit more of what does that even like really mean?
Well, I think what it means is that it's a way of funding something but using other people's money. And business and people understand that, right? They borrow money to grow their businesses, or they're in real estate and they borrow money to buy properties. So similar concept, except for that what they're doing is creating massive tax-free income using other people's money. But like you said earlier, not everyone qualifies. This isn't a strategy for everyone. It's a strategy for less than 2% of the population. So you're talking the 1s and 2%. What does that mean? That means that their net worth is over $10 million that they even look at it. So most advisors don't work in that world, so they have probably a couple clients that make sense to do it, but they're not in that type of planning every single day. That's what I do. So I meet with advisors, I meet with these clients, and really it's just showing them a concept. And what's great about it is a lot of it is just education, Karl, just showing people how to do it. And they decide. That's what I love about working with high net worth people is they make decisions, right? They make a decision, either they're going to do it or they don't. So I have a lot of advisors say, Dan, I've never been able to get this guy as a client. He makes a lot of money. And time again, I tell the advisor, I said, watch at the end of the strategy, when I explain it to him, he's going to say, wow, I've been pitched a lot of stuff before, but I've never seen anything like this. So, it's exciting to do that and for it to make sense for people. And I've been doing it for a long time. Like you said, I have over $750 million loans and over $2 billion funded. So it's a great strategy, but it's great for the right person.
I see.
Yeah.
So what does the right person kind of like look like? You mentioned that someone with a $5 million net worth or $10 million net worth. Some people that are listening to this might think, well, if someone already has $5 million, $10 million or more, why is it that they would even need to meet with a financial professional to even go over strategies? Like, haven't they already created wealth? And people might think, well, why don't they just continue to do the same thing that got them to 5 million or 10 million?
I'm glad you said that because, I think if this strategy is implemented as part of an overall plan, it makes a lot of sense. And what I mean by that is that regardless if you're 5, 10 million, whatever, you have capital. One of our phrases we talk about is what's the highest and best use of capital, right? And that might be doing what they're doing. I think most business owners, their best investment is always in their business, myself included. If I invest in my business, I get my best return. So what we're trying to do is say, yes, keep doing that. But instead of you funding what I'm going to show you, I'll get a bank to fund it for you. So they're going to take the money and fund it for them. So they're buying the strategy at discounted, capital out. So they're able to keep growing their net worth the way they were. But what happens then if you're very successful is that the government likes to take the money either through taxes, estate taxes, whatever, right? So we have to be smart and protect. So I do a lot of philanthropic planning, estate planning, creating tax-free income. That's the one thing I found is that most of the rules and the good things like Roth strategies, all these things that are tax-free, if you make any type of money, you can't do them. I mean, they don't let you do it or there's restrictions on it. This is a way to have almost like a Roth concept, but no contribution limit. So, it's kind of an interesting strategy. So 5 million net worth, business owners, professionals, athletes, real estate people. I work with a lot of doctors, lawyers, good income earners. Those are the type of people that we're working with on a regular basis.
Got it. That's great. And then for a little bit more clarity, right? So we say the banks are going to finance, right, and leverage that income so that they can continue to grow more wealth. But then you say they have to be able to afford financing and payments and stuff like that. So can you speak a little bit to that? Like, what does that mean?
Yeah.
Are the banks paying for this? Are they not paying for this? Or is the client paying for this? How does that work out?
It's a good question. So with this strategy, the reason I like it is that it's like you just don't do it, right? There's a qualification. And so because it's insurance and the way we structure these is maximizing the amount we put into the plan and minimizing the insurance costs. It's kind of like the exact opposite of what people envision of buying term insurance, where I want to pay the least for the amount of coverage I want. But actually, E.F. Hutton, who was an investment guy back in the 70s, said, well, if I could put money into a policy and have a minimum death benefit and grow it tax-free, then I can take money out of it tax-free. So it was a really kind of an interesting strategy. Been around for a long time. So we maximize, what we're putting into the plan and minimize the internal costs of the strategy. So that allows us to grow that tax-free, and there's no limitations on that.
That's great.
Yeah.
they can basically have a minimal amount that they get to put in, right? And you talked about having a minimal death benefit, and that way they basically get to grow their money tax-free. They also get to withdraw the money tax-free and have a tax-free income for life. That's how it works, right?
Yeah.
So if someone's minimum net worth has to be a minimum of $5 million plus, like what is the minimal amount that they're actually having to contribute to a plan like this in order to have the banks agree to finance the rest of it?
So I think the simplest way to think about this is, because everyone's different, like you said earlier, everyone has different goals, everyone has different aspirations, everyone's plan's a little bit unique. That's why I really like doing this, because everyone is different. So my plan that I put together for myself may be different than what plan I put for somebody else, right? I mean, think in your mind, whatever your contribution amount is, I'm going to have a lender put in 5 times as much money. So if your budget is $100,000, I'm going to have the bank put in $500,000. If your budget is $200,000, I'll have them put in $1 million. That's how the strategy in the simplest form works, and then that will grow over time, and then we take a distribution, pay the bank back, and then the client has access to capital for retirement, which is better than what they've been able to do through traditional planning.
Wow. Okay, so the banks are willing to go in 5x, 5 times more money than whatever it is that they're contributing to this type of plan. So if you contribute 100, a bank would be willing to pay 500K.
That's correct.
And this is like total amount, or is this a yearly amount?
That's a yearly amount.
That's a yearly amount.
That's a yearly amount. So like on that plan, usually we're going to be doing this for about 10 years, Karl. So you're putting in 100, I got a bank for 500. So that they're doing that for 10 years, right? Mm-hmm. So the client's commitment when we started was saying, I can put $1 million towards this plan. We're going to get a bank to put $5 million in, the policy is going to grow, pay the bank back, and then they have access to, the capital down the road. Now, keep in mind that when we talk these numbers, there's still a process that they have to get approved by the insurance, that it's the right amount for their situation. The bank says, okay, it's underwriting. They don't just give free money away. Does this person qualify? Just like a mortgage or something, you have to qualify. But most high net worth people can qualify, right? And the plan has to make sense. So we're not, and if it's part of an overall plan that's not putting all their money into it, then it usually makes sense.
Okay, so why is it that the banks would agree to partner up with one of your clients to be able to do this, as opposed to just saying, okay, we'll take this 500K or we'll take this $1 million and just invest it somewhere else ourselves?
No.
Like, why does it make sense for the bank to want to participate and play this game?
Yeah, so I think the bank, it's a great lending mechanism for whatever bank is doing this funding. Here's why, Karl. If a client dies, they have the insurance that covers the bank note. So that gets the bank excited, so they know they're not, if something happens, they're going to get taken care of.
Okay, so there's like a collateral.
Yeah, so the collateral is the policy.
Okay.
A client has to post outside collateral. So in order for someone to qualify, they have to be able to make payments, but they also has to post that short-term collateral. So a bank's always 100% secured. They have no risk. They just collect interest payments, and then they collect payments from the insurance company to pay them off. So they're just using their capital, and like clockwork, the money's coming into them. So any lender that does this, and let me specify, this isn't something you go down to your bank teller down the street and say, I want to do premium financing. That they don't even know what you're talking about. So I work with divisions of banks, and all they do is finance insurance policies for high net worth people. It's pretty amazing, but we have about 5 to 10 lenders that we work specifically with, but I'm working with those people in the divisions of the bank that do this type of strategy.
I see. So this isn't something that any financial agent or any insurance agent can basically go ahead and offer for someone, like
No.
if you have to work specifically with certain banks then.
Right. So my role is really to help agents, clients, to manage an insurance transaction and a loan transaction, and I'm kind of the intermediary between the bank, the insurance, the client, and the advisor. Because of the long-term nature of the contract and strategy, then we have to make sure that the policy premiums get funded every year, that the interest is paid, the collateral is enough to satisfy, and that's what we're doing. So when you have a bunch of loans and committed capital out there, you have to make sure that the plan is going to work, because this is not something you do once. I mean, it's a long-term commitment to grow your wealth.
Yeah, for sure, 100%. That's actually really fascinating stuff. So, how was it that you were able to start off in the insurance business and start off doing insurance and then work your way into offering premium financing to high net worth individuals? Like, how'd you even get into all of this?
Well, the insurance world, I mean, basically, I had a sales and marketing company when I was in college. I paid for my own way through school, and I worked like 70 hours a week while I was going to school. I mean, it was kind of crazy back then.
Yeah.
But when I stopped doing that sales training business, then I started applying and I went into the insurance business in 95. I knew nothing about it and started doing the training. And I always liked dealing with people and trying to figure stuff out, because that's, I think interesting that every person's a little bit different. So not every program is going to work for everyone the same way. So I like that creativity.
You were doing this while you were in college, or is this after?
Right after college.
Okay,
Yeah.
got it.
So, but the hard part, Carl, I mean, like in this business is one that you will be extremely underpaid for your first 5 years, and then you'll probably be overpaid for the rest of your life.
Wow.
Yeah.
That's actually, I've never heard that put that way. And it's like the journey of the entrepreneur. You always know that you have to start and you have these dreams, aspirations, goals for things you want to achieve. It never goes as planned, especially in the beginning stages.
Never.
And most people don't last long enough to be able to see the other side of it, where the life starts to get good. But tell me, for you, like when you started off in the business, did you have success right away?
No.
Did you? Okay, cool. So tell me about that experience, because you have a lot of people, maybe they're not in the insurance business, but all these guys here are hustlers, they're business professionals, they're trying to build and grow and create something. So they're going to have to go through that same entrepreneurial journey. So tell us a little bit about yours.
I think the main thing is my belief was in myself. I mean, I knew I could do this, but I just had to get trained. So my mentor, when I started in the business, was a great guy. But as I got into and worked with him on a regular basis, he had a big business in New York. He had a business in Chicago. I was in Chicago. He had 7 kids. So I got about 15 minutes of time with him a week, roughly. I mean, it was life. His life was just very busy.
And was he an individual agent, or
Yeah,
this was the owner?
he was an individual agent.
Not a broker of a. Okay, cool.
No.
So he's big time as an agent.
Yeah, he was a big time agent.
Awesome.
And so he taught me some things, but I mean, I really had to learn a lot of stuff by myself. And I highly don't recommend that for people. If you find someone that does what you want to do and you can learn from them, maybe you share comp or whatever you do, but I feel like that's the best way to learn, is to learn from someone who's already doing it. Like, that's what I tell agents. If you haven't done financing cases before, let me help you. I mean, I know how to do this. I've been doing it a long time. And then as we do more and more of these, you're going to learn how to do it. But the thing about this is that with high net worth people, they don't have all the time in the world, right? When I'm doing this, I have like 30 minutes to get someone hooked and interested about this. And if I can have 10 meetings with them because of all the planning we're doing outside of the financing strategy, they're interested. And I've opened up a lot of doors for advisors, because most of them are business owners. I mean, they're doing their retirement programs, they're doing other plans with other employees in the company. And so the door's been open, and now they have a strategy that feels unique to them, and it is.
Yeah, no, it's definitely a unique product for sure.
Yeah.
More people should actually invest more time into working with people that offer this stuff so that they can actually learn about it, because, it's extremely valuable, especially to the people that are looking for ways to leverage a wealth creation strategy,
Premium financing is just really a different way to fund an insurance policy. Instead of you paying it out of pocket, you're having a third-party bank do it, right? I mean, it's that simple. There's a lot of complication, but it's that simple. So it came naturally to me doing it. So half of my career is just regular business, investments. About 15 years ago, I started doing financing. I knew how to sell insurance. So I sold hundreds and hundreds of policies before I started doing this. So I did not start in financing. I learned it. And that strategy I was talking about earlier, like the doctor, I had to figure out a different way for this guy to do it. And that's when I started. I figured it out. And then I just said, hey, this is kind of neat. And I just kept doing it. And then with my role as an intermediary, now helping other agents around the country, we're busy all the time. And transactions you don't have to do a lot of them to earn a good living.
Yeah, that's great. Okay, so diving back into your story a little bit, because I find this fascinating. I always like to find out how people grew into becoming the people that they are today, right?
Yeah.
How long did you feel like you had to work with and learn from your mentor, even though you had very little time before you became independent?
So I started with Northwestern Mutual in 1995, right? And I lasted about 2 years. I didn't like every conversation to say, well, it sounds like you need to buy a whole life insurance policy. I mean, that's really what it was, you know? So I did that for 2 years, then I went independent. When my business really took off is that when I had my first daughter, and my wife and I talked about it and decided that she wasn't going to work when we had kids. I never earned a paycheck from a company before. It was straight commissions, and it was showtime. It was like, I have no one to rely on. I got to make this thing happen. You know, with every business, there's cash flows, ups, there's downs, and everything like that. But what I found is that if you believe in something and you commit to it and you work hard, that's something you can't teach someone. If they have good work ethic and they find something that they're passionate about, I think they can become successful.
Yeah.
For me, it was like, I got to take care of everything, and my wife's not working. She was working. She had the hardest job in the world being a mom, but we didn't have another source of income, so I had no one. If it didn't happen, it was because of me, and that's when my career took off.
I love that.
Yeah.
I love that.
Yeah.
So basically you used your family as a reason to step up, get motivated, become a different version of yourself. Who's your firstborn, by the way? Was it Andrew?
No, Andrew's my youngest.
Oh, Andrew's your youngest.
Yeah,
Okay,
so
great.
my daughter Isabel, and then my daughter Alexandra, who's in the business now too, which is great. And then Andrew, who's graduating, and he's joining in a couple months. But so I had 3 kids, and it was great. I mean, I love being a dad, but the point is that besides the hard work, is I've always been curious. I've always loved to learn. So you can't be lazy. You have to learn and keep growing. And like what you're doing, I find fascinating, Karl, with coaching entrepreneurs. I was in strategic coaching. I mean, quarterly business coaching, learning from people. I was like the low guy in the totem pole. That was awesome. I mean, I'm with authors. I'm with all these cool people, and all of us had the same problems. It was so amazing that once a quarter we would just hang out and talk about business. So we were talking about our business instead of just being in our business. We were talking about strategies, and I think you promote that a lot, that you do need to have a strategy because you can't just keep blowing in the wind.
Yeah,
So
100%.
Yeah.
Thank you. I think it's very important. A lot of people start off with a passion for something that they really get excited about. And kind of like you were sharing, you got into the insurance business, and obviously you have your kids, it's pedal to the metal. So the passion was there, right? But if you're using the wrong strategy, it's like running in the totally wrong direction, right? And you'll never get to the right destination.
But it's also learning, Karl. Like, I mean, when I started premium financing, I mean, like I told you, I funded over $2 billion. So, Karl, I mean, I was like my first 30 appointments, 0 for 30.
0 for 30.
0 for 30.
Your first 30 appointments.
Doing financing.
Yeah.
So I'm like, okay, I know I can do this, but I'm not doing this right.
Okay, wait. Time out. So you were doing insurance.
So I always had my planning business, right? So I was just started to do the premium financing, but then I was meeting with agents.
Premium financing. I mean, the reason I'm asking is because that has to be a hard blow, especially if you get good at one part of the business. You know how to close clients. You know how to generate leads, get referrals. And that's working, right? You got this wheel flowing, and then you start with a new strategy or a new business or a new part of your business, and all of a sudden, over 30, that's got to be pretty gut wrenching.
Yeah, but I think because I had the success in the past, and I sold so much, I'm like, I just got to figure this out.
Okay, so you need to figure it out.
So I just had to figure it out. It's interesting because my son Andrew did actually help me with this. Is that okay? What I need to do is create a presentation that talks about all the objections I'm getting, and I want to answer them while I'm presenting it. So when the client's in their mind thinking this, I'm answering it. So by the time they go through the presentation, they're ready to go. And all I want to do after my presentation, Karl, is get them to see if an insurance company will give them a medical offer that they're healthy enough to do the strategy, because that's the first qualification. If they're not healthy and they have issues health-wise, this isn't the right strategy for them. It's very simple, because a bank won't even look at it unless there's an offer on the table from an insurance company. That's the first step of doing it. So Andrew helped me put this presentation together. We put it together. And when I started doing that, it was like, it would just start working. And it's very rare it doesn't at least get someone interested. Doesn't mean they're going to do it, but they're usually intrigued by it.
Yeah, I mean, how could you not be? I mean, a bank's willing to partner with you and go 5X on whatever it is that you're starting off to, your leverage strategy for growing wealth. That's pretty impressive, right? That's pretty awesome. Okay, so what happened? What was that change that, allowed you to go from like ordinary success to like extraordinary success? Because I mean, now, we're talking and you're like, oh yeah, I have this client here. I'm doing a talk over here. I have to be at this conference. Then I have to come into Florida. I'm going to be in Miami. Then after that, I have to go to Boca to meet with these people. So it seems like you have things happening left and right. What took you from average, regular success to going extraordinary, hyperbolic? Now you're meeting and you're actually closing high net worth individuals. Most people couldn't even get close to meeting a high net worth individual if they tried, right?
Yep,
They don't know where to go to talk to them, how to get them intrigued, and let alone how to actually get them to partner with you and buy into what you're offering.
Karl, I think what really changed in it, before, when I was over 30, fly down to a place, present, hope things work out, go back home, come back down, and it was just too long of a time period. And then we started doing Zoom calls. And then once I started but prior to doing Zoom calls, I don't know if you remember, is that there was no high net worth person that would do a Zoom call with you. You'd be like, I am too good to do a Zoom call. You need to come and meet me in person, right? Zoom changed everything. Then it became normal. And that's when our business took off, because all I did was like 8 Zoom calls a day with people, and you just could work with anyone all over the country, just different time zones. I present, and then I can schedule right there saying, I want you to look at this. Because usually when I present it, I'll just present a sample. That was one of the mistakes I made earlier, is that I'd come in, I'd have your name on the presentation, here's what you should get, all this. And I've never had a conversation with you, so I'm telling you what you should do. That's not how this works. You give them the ideas, and then usually at the end of it, they say, this is kind of interesting. What would that look like on me? Now you're moving. You start to get into the process. So I think I was pre-selling, and in my mind, and what most advisors I work with, they do the same thing. Oh, this guy's going to do this. Sure. I said, let's present and let them make a decision, because they'll make a decision if it makes sense for them, but let them decide on what their budget's going to be.
Love that.
Yeah.
And how is being able to lock in these types of clients, like how does that change your life for the better? Sorry.
Karl, I meet some really, really neat people. I mean, these high net worth people, I've always been fascinated how people earn a living. I had one guy that was a multimillionaire, and he was a tape dispensing company. Just cuts rolls of tape from different things. And I'm like, how do you do, you're making like that kind of, it's fascinating to me. And these clients, I mean, like we talked about, same problems. We're peers right now. I become their peer and their friend. And a lot of the transaction, I'm helping the advisors out, but I end up doing a lot of the work because this is what I do, right? It's like, it makes a lot of sense. And then communicate with the advisors on what's happening, just because they're busy doing other things. If they're not doing this like I'm doing it every day, then you shouldn't. Just like anything, it's a hobby. It's not a job, right? And I don't think that's why I stopped doing my my other business. What I started with, the insurance, the annuities, all that, because I felt like I was giving them a disservice because I didn't have the time to follow stuff, to follow markets, do all these things. But that's what we're growing into. Like now, we're as a family office where we'll do other things, but other people doing that, where I can just bring this aspect to the business.
I love that.
Yeah.
I actually want to circle back to that family office conversation, but before I do, tell me, what are some of the outcomes that you've been able to create for clients that actually start the premium financing process? What types of results are they able to produce for their lives 10 years, 20 years, 30 years down the line as a result of getting that premium finance product?
So think of it, if you have a client that, and let's just do this example, but let's just say we're working with a 50-year-old person. And they're willing to put $100,000 in. We're usually going to pay the bank back in about 12 years. And then after that, if they allow the policy to grow or they have access to capital, they're putting $100,000 in, where the bank's putting in $500,000. They may have $300,000, $400,000, $500,000 of income depending on when they start it, because of that $500,000 contribution that a client's doing. And so when we talked earlier, it's like, what's the highest and best use of your capital? If you took $100,000 and just invested in the market, if you took $100,000 and invested in an annuity every year for 10 years, and we all earn the same rate of return, because we're using someone else's and they're putting that $500,000 in the bank, they have to earn like double digits of, if I'm averaging 6.5, they have to earn like 13 to get the same amount of income tax-free.
Yeah.
So after taxes and all the other things and just that leveraging concept, it's very difficult to beat the numbers. But that's the thing with the insurance world and everything else, is that we know how to do it. So it's not a strategy you just sit and watch. I mean, you have to be active. You have to manage it. You have to manage the policy. You have to manage the loan. So my job is, hey, Karl, this bank's not offering us as great as rates as this bank. So I'm going to refinance it, just like the mortgage world. So there's just I'm doing things, and our goal is what's the least you can pay as a client, and what's the most benefit you can get. And that's why, working with a specialist and other things I think is powerful, because if you're only doing this once in a while, you're not going to get as best rates as I do. I mean, if I have almost $1 billion, I'm going to probably get better rates than you. And so a lot of my job is just telling stories, Karl. Like, this is what one client does. This is what, and I'm just giving you ideas. I want them to get ideas, because the goal is I find something that they can resonate with that makes sense to them. Then that's what we'll focus on the whole time.
Nice.
Yeah.
Can you share some of the strategies that some of your clients have focused on? Because like you said, right, some are going in with a legacy-based focus. Some are looking for an income for life. Some are looking for different reasons, maybe charity. So can you speak to some of those? What are some examples that you've seen?
So, and the nice thing about it is as we design it, I mean, we have to have flexibility in the strategy. So a client doesn't have to decide, I want philanthropy, right? Because things change, and we're doing this over a long period of time. You can have someone's net worth be here, and then something happens and it skyrockets, and then, well, I needed income, but now I don't need income. I just need to have the policy to pay for taxes, do whatever. So when we design, it's usually in that funding period is the same. We're always growing the insurance benefit to cover the bank loan off, and then net out the benefit to the client. So a lot of my applications are, estate planning, philanthropy. If I can create a death benefit that starts at 10 million, grows to 35 million, it costs you $1 million. That's a great way to leverage what you're trying to do, whether that's for a charity or whatever.
Hold on. Let's rewind that right there. Okay. Let's speak to that a little bit.
Okay.
So if you can help someone literally contribute, you said $1 million, and they could end up with a death benefit of how much? $10 million, you said?
Started with 10, and then it grew to like 30.
And then it grows to 30.
Yeah.
Okay, so what is a death benefit for people that are not familiar with that case?
A death benefit is the insurance plan. So when we design it, what we say is, what is your budget, the payment, right? Whatever that payment is, having a bank put in 5 times as much money, right? So when we go to the insurance carrier, we're going to say, okay, if we have a client that the bank's going to put in $5 million over 10 years, what's the least amount of insurance I possibly can buy, because I want it to grow as fast as possible, because I have to pay a bank back. And that's going to be the number that we start with, right? I mean, and I'm just said that example, let's say, is $10 million.
Yeah, and this is just an example, hypothetical. Actually, let me throw in a disclaimer. Once again, this is not financial advice.
Right.
We are licensed advisors. We have a licensed advisor here, but he is not your licensed advisor. Everyone here listening, you have to make sure that you meet with a professional so that you can get the right financial advice that's tailored to your specific situation, because everyone's needs and goals are different.
Yeah, that's that. So Karl, then that's the death benefit. So really the insurance part of the equation is, it just kind of comes along for the ride, right? I mean, people are using it, but it's really the tool. I would just ask the client in my first meeting and saying, what are you doing to create tax-free income? And no one ever had an answer. Yeah. And if you're in the high net worth space, Roth's never an answer because they make too much money.
Yeah, you can what is it? What's the limit for a Roth? 7,000 or 8,000 per year?
Yeah, and that's nowhere near what they're used to. I mean, that might be 1 week's income, or I mean, whatever
right?
Whatever. Yeah. But the point is, so then you have muni bonds, which are tax free, but they usually don't have a really good yield, right? So the only other way to create tax free income is to have properly structured insurance policies where you use them for cash, and you buy the least amount of insurance, the exact opposite of the term insurance. So that's what I would tell clients every first meeting. That's the 3 ways you can create it. So I'm going to show you ideas to create tax-free, because you don't have that right now. That's how I sold a lot of insurance earlier. Same with our concept. They're creating tax-free income, but it's using the bank leverage, which is discounted. So let me go back to the charitable thing that you asked me about. I had a guy. And this is where I've helped a lot of advisors, just because of what I talked about earlier. Learning strategies, learning the business, learning what business you're in, learning how to do things. Know what you're selling people. A lot of people don't even know what they're selling people, which is scary in its own sense. But you look at it. So I had a guy that said, I got approached by a university to donate $50 million, and they were going to name a building after me. So I think I'm going to do that. I like that idea. I said, why would you do that? And he's like, what are you talking about? And I said, well, if I could do that same thing and it cost you 20 million to give you 50, would you be interested in doing that? Yes, I'd be interested in it. So what we did is we financed a policy for 50 million. It cost him 20 million in payments over the 10 years because he was older. And we just gave 50 million. Just think how many kids and people that's going to help $50 million to the university, and it cost him, and he was going to do it anyways.
So he was going to contribute $50 million just to have his name put on a building.
Yeah.
You showed him a strategy where he can do it through insurance.
Yeah.
And it wasn't the death benefit that was paid
Yeah.
out.
Yeah, the death benefit, because that's when he was going to do it. He was going to leave.
Okay.
That's how he was going to leave 50 million to his alma mater.
Okay, wait. So now you're just bringing out all types of
Yeah.
amazing things here,
Yeah.
right? So this is someone that wanted to do this as a contribution after he's passed, right?
Correct.
And so this was going to contribute to his legacy. He has his name. He contributed. And now there's a way that he can do it without having to spend all the money, right? He just contributed $20 million into it.
Right. So what I told him then is I said, okay, if you're going to do this anyway, why don't we do this? It's going to cost you 20, but then donate your assets that you have, get a tax deduction for doing that, and keep the 50 million tax-free for your family. And then it's like, that's even better because he's going to do it. So you just have to know strategies like charitable planning, and that's where I bring value to my advisors because we can have a conversation, and I've done this so much. Let me give you another example.
Yeah, I was going to ask.
Real
for another one.
estate,
This is great.
real estate guys.
Yeah.
What do? They do deals all the time, and they do 1031 exchanges. 1031 because they don't want to pay the
They don't
tax.
want to pay the tax. So they
Very,
roll over
very,
into the next
and I
level.
agree with them. That's awesome.
Yeah.
But the rules say that you have to buy something of like or higher value, and you have to do it fast, like 90. There's a
Yeah,
time
you
limit,
have that
right?
time limit,
So
yeah.
I felt like all my real estate guys were just selling stuff just to avoid tax. I don't know if they were getting their true value out of the property, really, but I got to do it because I don't want to pay the tax, right? And you don't think the person who's buying it doesn't know that? I mean, they're like, okay, I can probably get it for less because these guys got to do an exchange.
It's got a timeline.
So
yeah.
both parties know what's going on, right? Because most real estate guys do a project and they have different partners, right? Like this is my partner in this building. This guy, so they have like 30 LLCs and they have all these different projects, different partners. And what happens is that we create buy-sell agreements. What I mean by that? So we buy a policy on each of them. The banks love it, who are
On each
lending
of the-
on each of the partners.
Okay.
So if one of them dies, they'll have the cash from the policy to pay out the other one, and now I own the building 100%. I don't want to be partners with the guy's spouse or some of his kids or whoever that is, right? I mean, so he's going to pay them off. Now we have 10 million. Let's just say it's 10 million that the bank loan to fund this. So we're taking premiums. Let's say that 10 million cost him 100. We got the bank putting in 500, right? Now he's got a loan balance, and they sell the property. Let's take the 10 million proceeds from the policy from the building, pay the 2 loans off that we just created with the bank that I have. Now you have all this money in your policy, tax-free, that can grow. I'll take the money out of the policy to pay the tax, the capital gains. So you're not paying that. Then you have all this money, and then I have guys that have financed their next real estate projects with their insurance policy that has millions of dollars of cash in it to pay their next things, and then they pay themselves back through an amortization schedule. Now their retirement just went from I want to sell buildings to $1 million of tax-free income just by thinking different.
Yeah, that's a very creative strategy that most people would never even think about. So when you say $1 million, right, in tax-free income, is that $1 million one time?
Annually.
$1 million annually for how long?
I usually portray stuff out till age 100.
Okay, so they would get $1 million annually until age 100.
Yeah.
That's powerful.
But keep in mind, Karl, when you asked earlier, like in order for them to get $1 million on the back end, the front end that they're doing has to be of substantial size. That the money's got to go in there. It doesn't come out of nowhere, right?
No,
So I'm not. If someone says I can commit 20,000 to this strategy, they're not getting $1 million. Does that make sense? I think the main thing too, though, is that this is what I'm going to need in retirement. What would I need to do to get there?
Yeah.
So that's why every plan's different. So if you wanted to do that, this is what you got to do. And then they decide whether they want to do it or not, or not. So then we do that, and then they go through the process, and we accept the insurance policy, we accept the bank loan, and it starts the process. So, they want to apply for the most that they think they would do, and that might be tied to that's going to provide me the income I want, right? Now, if they say, well, I think I only want to do half. then my answer to them would be, Karl, that's great, but now, I can only provide you 500,000 versus $1 million of income. If we got now we're going to save, we're going to save 50,000 a year for 10 years, but it's going to cost you 500,000 a year in retirement. Is that okay? And then usually they'll say, let's just do the 100. So you just have to understand it, because it's logic and numbers. I mean, that's all it is.
Yeah, I mean, to think that you would only have to contribute 100,000 hypothetically for 10 years, and then in retirement you would have $500,000 or $1 million that gets kicked out every year for the rest of your life or until age 100.
That's why you want them to be part of their overall plan, right? That it's like, because they're not seeing this money early, right? I mean, it's a longer strategy, so you have to make sure that they're going to have what they have and what they need to let this thing work for them.
Well, I love the idea that you mentioned about, I mean, that was powerful. Like, you drive by buildings all the time. I did a video on this a few years ago, and I was driving by and I'm like, this name on this building, this name on this building, this name on this building. I'm like, who the hell's names are on these buildings? Like, people have money. And this was right after COVID, right? And I was like driving down the streets in Miami, driving around, and I'm looking around. You have people's names I've never even heard of that are on buildings right next to Wells Fargo, right next to Chase, right next to JP Morgan, right? And it's like you have some random person. I'm like, what are these people doing? And at the end of the day, what I like to explain to people is that, these people are human beings just like the rest of us, right? Some people were born into money, but 80% of millionaires right now are actually self-made, right? And so the amount of new millionaires that we're creating is just insane. I think it was in 1950, if you took a look anywhere in the world, there's like 100,000 millionaires anywhere in the world at any given time. 50 years later, by the year 2000, there was 2 or 3 million millionaires. By 2010, there was over 10 million millionaires. By 2020, there were over 30 million millionaires worldwide. You take a look, just 70, 80 years ago, there's like 100,000. It's just crazy. So there's a new amount of wealth that's being created. These people are doing amazing things. It's happening all around us. And at the end of the day, no one's really better than you. No one's smarter than you. They just have a different level of commitment. Their commitment level is different than the average everyday person.
And that gets me excited because of the fact that when you come from nothing and you make it, you know how hard it is to make it. When someone says, hey, I sold my business X, I'm like, I'm truly excited and happy for them, because when you're a business owner, you know how hard it is to make it, right? So when someone makes it, good for them. A great way to work hard. They're decision makers. That's what I need. I need people that make decisions. People that inherited money or never did it themselves, hardest people to work with. I'm not saying they're bad people. They just don't make decisions because they don't know what it means to make the money that is. So when I'm doing this, a lot of mine are self-made people. It's not inherited money. It's very rare. Very rare.
You're absolutely right. It's a number one quality for people that become authority leaders in their field. You have to be decisive. You determine this is what you want, and then you take massive action, find a way to solve whatever problems or challenges happen along the way, but you are decisive, right? You cut off any other option, and this is what you're doing. Whereas like lower level of leadership, they don't like making decisions.
No.
They always want someone else. Let me ask the wife. Let me wait for my boss. Let me wait till I get this loan. Let me wait for the bank to approve. Let me wait. They have the if-then mentality. If this happens, then I can commit or move forward, right? People that really do something in this world just make a decision. They find a way to just make it so.
And that's what's great, though, Karl. When you're first new in your business, like if someone tells you no, like when I was over 30, right? But I was like, okay, now I'm like, okay, I'm going to present. And I want them to say yes or no as quick as possible, because I have so much other stuff to do and people to work with. Either you could do it or not. So there's no, it's like you explain the strategy to them. They like it or they don't like it. They do it or they don't do it. And then you're doing the next one. I mean, when you value your time, same with like we talked about earlier, when you have mentors, if I can get from point A to point Z in 3 years rather than trying to figure it out myself for 20 years of how it works.
Exactly.
I mean, now everything is just moving fast, man. And you can do so many things through technology, and you really can create a business anywhere now. It's pretty exciting.
Yes, this is the access to the resources, right? We have the internet that basically changed everything. Now everyone can build a business, work from home, use their laptop as long as they have an internet connection, a cell phone.
Yep.
You can do business from anywhere in the world in most cases.
Yep.
Know? And so you have all these resources, everything that's just brought together. And then there's not a lack of information. There's actually more information now than ever before at any point in history.
Karl, I think that's important.
Yeah.
Because you have to be good at what you do. You have to learn stuff, and you have to be in your business, and you have to take it serious because of that very fact. If you don't know what you're talking about, they'll research, do whatever they need to do, and be like, this guy doesn't know what he's talking about, right?
Yes.
And if that happens in my world, you're done.
Yeah.
They're not going to trust you, and you can't guess. When you're talking this kind of money and everything else that's happening, you can't guess at this stuff. I would like to talk about like risks and other things, because we talked about a lot of the good stuff, right? I do want to talk about some of the things that can happen.
Yeah, let's get into it.
Okay, so
what are you talking about? Like, one thing I was going to ask you earlier is like, who is this not good for? Because we were finding out, obviously, high net worth, at least $5 million, right? Net worth as a minimum. You're going to be contributing at least $100K a year for the next 10 years.
On that example, that's
on that example,
right. That's not the minimum. So, but
it's not the minimum.
No, the minimum, like I said, would be in that formula like 20K, where the bank puts in 100, right? I mean, so that's kind of the minimum. But 100. I mean, it was an easy form of an example, I guess, but I don't want people to think like you can't do this unless it's 100K, right?
Okay, so question on that end, and we'll get into the risks in a second, but just to piggyback off of that, why is it required for someone to have such a high, like let's say someone doesn't have a net worth of $5 million, but they only have a net worth of $1 million or $500,000, and they're willing to contribute 20 or 30 or 50K a year into a plan like this, and they can afford it. Why does that person need to have that net worth?
I think a couple things. The first is that the insurance companies and the banks kind of set the rules. So it's not my rules. I follow what their rules are, and they want to make sure it's suitable and someone that is. It just may not be the right strategy for them because they still need to develop other things, right? I don't know. I don't really go into it, but also is they're looking at, like, from a suitability standpoint, is that when you have these higher dollar, if they're younger, the death benefits could get too high, and there's rules in regard to like how much are you earning versus how much can you have, and so it's all there's a whole process. It's got to be suitable. It's got to be the right strategy, because going into some of the risks that could happen is, as we've seen it over the last years, is interest rates go from levels of getting people money for less than 3%. I mean, you're in the mortgage business. I mean, it's pretty easy to do stuff when it's that cheap of money, right?
Yep.
But then interest rates get jacked 13 times in a couple of years, and now you're getting the same amount for 7% or something, right? That's a risk. So but remember, it's a short-term deal, 12, 13-year period. We're going through a cycle now. Now I think interest rates are coming back in. So that was challenging for me, for clients. You get $1 million for 30,000. The next million goes in, another 30,000 on top of that. Then the third year it's 7%. The next million's in, and they have to pay 200,000. That's why when you have $1 million or something like that, because those things can happen. That person that's got $1 million, they couldn't handle a $200,000.
Yes.
So I think it's more of like saving people from themselves a little bit, because these things do happen, right? I mean, but now rates are coming in. So the point is that we try to be flexible, get a plan that makes sense, but whether it's high rates, low rates, they can afford it, and then, allow the policies to work.
That's great.
Yeah.
What do you think is going to happen with everything going on in Iran right now? And we're kind of getting into politics, and not to get into the politics of it, but overall, obviously interest rates are going to end up changing. How do you think it's going to affect your ability to set people up on these premium financing deals?
What's interesting in the insurance world, Karl, is that when rates went up, people think, oh my gosh, this is bad for strategies. But remember that when interest rates go up, what happens? People's earnings on their savings and CDs go up. Insurance companies on their investment yield, because they're very conservative, go up, allowing for people to earn more money in their policies. So they may be paying a little bit more, but would you like to pay a little bit more and earn more, so in the back end you get more? So you got to figure out what are you wishing for, right? I mean, some people go, well, I want to pay the least, right? Well, then maybe the policy won't perform as well. The yield is not there for the insurance companies, so they don't allow you to earn as much as you could if rates were a little bit higher. So I think we're in a good zone right now.
Okay. What are some of the other risks that you wanted to talk about?
Well, the interest rate risk is once, and then the other one that we kind of just touched on a little bit is that this is a strategy where you do need, where you're putting the money, if the bank's putting that into an insurance policy, we do need that to perform. No bank will allow me to put money into a policy like a variable policy that's invested in mutual funds and other things that it put the dollars at risk. A lender won't give me money to do that. So they need, because they don't want the money that they're lending to the client to get blown out in the market, right? Mm-hmm. So a lot of products that we have to use are index products that have, loss control where you can't lose any money. You may not make any, but you can't lose any. Whole life policies, people like guarantees, but anything that's related to an investment. I'm not saying it's a bad policy. It's just that a lender won't fund that type of policy.
I see.
You can still do it. People can still do it. It's made me make a lot of sense.
Yeah.
But a lender's not going to give you the money to do that. They don't want to get, the market to lose 50% and then they're owed all this money and they're not going to get it back.
One of the benefits of going through life insurance, right?
Right.
You have an ability to grow when the market basically is up,
mm-hmm.
and when the market crashes, at least people that have a floor, have
mm-hmm.
a base where they know that, okay, well, the market is crashing for other people, I don't have to worry about losing money.
And that's a good way of having this program as part of their overall plan, right? Because I'm not saying that they shouldn't have investments. Mm-hmm. I mean, they shouldn't have real estate. But like when those things happen, like in 08 and 09, when the market lost 50%, mm-hmm. I had a guy who had to fund his policy, bank funded, right? They don't have a lot of choices. The bank's funding and it happens once a year, usually, okay? His policy date was March of 09. That was when the market hit the bottom. And his that he was putting in was $500,000. If I said, hey, I think the market hit the bottom, I think you should invest $500,000 right now, he would have said, no thanks. I mean, I just lost 50% of my, I'm not doing it, right? Because people, the shock value, they need to take, but the bank has to do it. So he had to do it. We put him in an uncapped strategy and he made 48%. Now, that's not normal, but he went from $800,000 for 2 years in his account to $1.4 million.
In what time frame?
1 year.
In 1 year.
Yeah.
Wow.
So that's not a normal thing. But that's why I'm saying you have to know the products. You have to know the strategies. You're not always going to be right, but you have to be logical and think through it and say, and know how these work. And in certain conditions, this is how this is going to perform. So interest rate risk, policy performance risk. The third is the client commits to something and then they don't fulfill their part of the bargain. Oh, I don't want to make the $100,000 payment. It's really like the way we structured is this is designed for 10 payments of $500,000 from the bank. You need to do your commitment. If they don't know, life happens where we've had to okay, we're not funding this year, we're going to make it up. I mean, that's my job as a planner to help, because life stuff happens.
That was actually my next question.
Yeah.
So what happens if someone that year can't
mm-hmm.
commit to my obligation, $100,000 for this year, because I got to commit to it for 10 years? What happens?
So they need to be able to pay whatever the interest is due, or we have to work through the bank to either defer it or something. So those are part of my job of understanding that.
So the whole thing doesn't fall apart right away. You could still save it.
But the hard part is that in insurance, you can always make up for stuff that you didn't do. But you just can't pre-fund, because I'll have clients say, Dan, I got $1 million right now. I don't want to do the 100 for 10 years. Can I just give you $1 million and cover it all? Not really. I mean, because you have to follow the rules of what the government says in regard to insurance. You want to keep it tax-free, mm-hmm. so we have to do it this way. And if they are technical, I'll say we're following rules 7702, 67, and I'll get into the IRS specifics of why we do it this way. Mm. But if they fall short, then that's kind of my job. I have to be flexible because, we're business owners. Things happen. Cash flow is great. Sometimes cash flow is not. So, you work with them like, Dan, I can't do it right now. I'm selling a project or something's going to happen. So my job is to communicate with the banks. And then because I think the volume that we have with these lenders and they know our track record, that they're willing to work with us because these clients are good people. They're just having a life event, right? I mean, so we have to build it. So if we don't give them that flexibility, that's, not going to work because things do happen. Fourth one is that we have lenders that were doing the funding and then they say we're not doing it anymore. So then we have to refinance the notes to another bank, right?
Really? So banks could actually do that. They can choose to
but you remember, these
deal.
are divisions of banks, and if they say this division, like I had a couple bank guys that worked at a big finance lender that I worked with. all of them said, hey, we want to start this. So they talked to other banks and we're going to start this division for you. Well, they started it 2 years ago when interest rates went up 13 times. Probably the worst time to start because, it's going to slow down activity. And the bank's like, we're out. Because they don't, there's a new opportunity for them. So that's why we have to have multiple lenders. And that's why, next week, we're going to New York and meeting with 4 lenders because that's what I'm trying to do. Just like probably what you did in the mortgage world is that some lenders' pricing varies at different times. And then you have to be able to pivot if you need to, right? So I look at banks that have no origination costs, no prepayment penalties. So if we do have to maneuver, then we can do that and it doesn't cost the client a lot of money.
Awesome.
Yeah.
Good stuff. Good stuff.
Yeah.
So here we have wealthy people that are part of the 1%. They have an opportunity to partner up with banks and have the banks leverage their wealth strategy. And they can get in on this for as little as 10-year window of time. They're basically investing into this strategy. They're contributing to this policy, this plan that they have, where they get 5 times more from the banks. They do this for 10 years. They have the ability to stop. The policy continues to grow, continues to accumulate over time, and now they have different options for how they're going to do their legacy planning. They have a death benefit that is just out of this world. I want to talk to you about how did this even come into existence, right? And why is it that the banks decided that this would be a good idea as opposed to find other ways to just have that money allocated in other, investments? Or how did this even come to play? If you have any background from that.
Well, my guess would be that banks are very conservative. It's a secured note, 100% secured, so there's no risk for the bank. Like if they lend money for a real estate project, I mean, the building can lose value, right? I mean, but they still, because it's a hard asset, they'll do it. But with the policy, because it's secured by collateral in the early years outside of the policy, and the policies, if a client dies, they're going to get paid, and they have the collateral to back it. So that's the main thing, Karl, that I think is important, is that the banks will work with you and are very flexible as long as they're secure.
Got it.
Meaning, so if their position becomes unsecure, that's when they get antsy. So the banks like it. Where did it come from? It's been around from probably the 1970s is probably when it started. But keep in mind, I think a lot of premium financing was on the commercial side where businesses and other things have these big premiums to cover a stadium, all these things, right? And they needed to finance it. So they came up, there was financing companies that started to say, okay, we're going to break down your payment, whatever they did, right? And I think it just stemmed off of that. Then they said, okay, in the insurance world, then, we're going to allow people to do this with their life insurance policies, right?
And it actually makes sense. You're right, because life insurance policy is one of the most secure things that you can have.
Right.
As long as you're paying your premiums, your policy's intact, you're protected on all fronts.
Right.
So it actually does make sense because, banks don't play with risky money, risky investments.
Yeah, they don't like
that.
it.
Yeah. So what is it that you feel has gotten wealthy people to really open up to this idea of, really maybe I should diversify and I should look into other ways?
Because, what we talked about is that the policies that we utilize are either guaranteed whole life or index policies that you can't lose money in. That in and of itself takes market risk out of the picture, right? So many people that are wealthy, they have investments in the stock market, they have real estate holdings, they have all these different things. This is a great way to complement by taking less risk, but also having a vehicle that can perform. Like most of my real estate guys I work with, they don't all of a sudden stop doing real estate and then take all their money and invest in the stock market because that's just not how they're wired, right?
Yeah, that would be crazy to them.
But this is a strategy that can allow them to get market type returns but not lose any money. So I think it's a kind of a natural fit for a real estate guy to say, well, this is something I would entertain. I'm not saying they're going to do it, but they'd entertain it, right? But if I have a stock market portfolio that's getting hammered, like you talked about the war and stuff, things are volatile right now. If I have something that's secure, then if my portfolio does suffer, then maybe I don't want to take money out of that, and I can take money out of this that I didn't lose any money in, and then I start to blend where I'm getting my income for in retirement, and that's where an overall plan makes a lot of sense. If this is part of the overall plan, it can't lose money. There's a lot of different, it's not only diversification of investments, but I feel it's in diversification of tax. IRAs are going to be fully taxed. Capital gains tax on real estate and investments. Here, tax-free. That's why high net worth people, I think, like it. And that's the hook, is saying, okay, I can actually grow money into an environment that I don't have to pay tax in.
Yeah,
You
no,
know?
that's powerful.
Yeah.
Great answer, by the
Yeah.
way. How do you think people that are high net worth look at legacy planning and how it differs from people that haven't generated a high net worth, right? Why do you think they tend to prioritize it a little bit more than hardworking everyday people that haven't accumulated wealth yet?
I think wealth and wealth transfer is more training than it is. It's like if you have a kid and you say walk when they were little, you got to train them. You got to teach them how to walk. Same thing with principles, and you have to teach people how to do it. If my kids are educated, why wouldn't I want to give them more money? Why would I want them to have all the pain that I had, right? Now, they're still going to grow as people, but why not allow them to have more, right? And then do other things that maybe I couldn't do, right? I mean, but I think that if they're trained properly and they learn, then it's natural for them to do things. And that's why, like, Warren Buffett, all this, the Gates and everything like that, their kids are like the head of their philanthropic planning. Okay, if you have an endowment that is worth $1 billion, you're going to have some influence, right?
Yeah. 100%.
It's just not like just giving them $1 billion. Use it for good. I've helped businesses that wanted to have the business stay in the family, but the younger generation didn't have the capital to buy out the partners. So I said to them, would you be willing to take your payout over time? And they said, yeah. I said, okay, so it's perfect for the insurance, right? They get an income for the rest of their life. We create the worth. Now I just created the capital for the kids to do it, and they keep the legacy in the family. And that was like a 70-year business, fourth generation. That's pretty unheard of. So you have to be creative and learn how to do these things. If you're helping people, even like the people who maybe their net worth isn't exactly where they want it to be, right? What if we said, what if we create this strategy and this becomes your legacy? And then guess what? If you don't feel you have enough, then you can spend all this other thing because we got this taken care of. Now they have the legacy through the insurance, and they can spend down their assets if they feel like they're going to be tight, if that makes sense. So depending on what the person says or what they want, our job is to give them the solution, give them ideas for them to start thinking and do something about it.
I love that. And now that you touch on that, it seems to me like the more money you make, the more likely you're willing to talk to somebody about getting different opinions, perspectives, seeing things from a different point of view, learning different strategy versus maybe you've lived paycheck to paycheck your whole entire life. It seems like these people, it's like pulling tooth and nail to just try to get them to just, hey, can you just look at something a little bit different?
Yeah.
Why do you think that might be?
I think the way we put it together, we got all these different concepts. We got bank finance and we got insurance policies. Let's put it all together. They've never seen it all put together. Knowing how to utilize a strategy for different types of planning opportunities. If once a client sees how they can use it, Karl, then it's easy, right? I mean, because they've already in their mindset, I could do this, I could do that.
Yeah.
Right.
Okay, good. If someone's watching this video, and they say, man, I'm inspired, I want to look, more into this. What are some things that you think they should look for in the ideal agent that can set them with the right plan?
How should I say this? I think that all of us are not good at everything. And if this isn't what you do, I don't know if it's the right thing. If you're explaining it to a client and you don't know how to do it, I mean, it doesn't make any sense. It's like if I go to the doctor and I have a shoulder injury and I need a shoulder surgery, why am I going to go to my pediatrician and say, they're not going to help me?
Yeah.
So, yeah, there's a lot of insurance people, but there's probably like 30 people like me in the country. You need to have a specialist to do these strategies because it's not something you buy and just forget about it. This is a max funded strategy, maximum capital. You want to work with an advisor that understands that.
That makes sense. Yeah. I mean, $750 million in loans and all this stuff.
Yeah.
That's pretty impressive. And then was it $2 billion in death benefits paid out?
Yeah. We've been doing it for a while, and it just adds up because the transaction size is bigger. So, it adds up.
Yeah. Yeah, 100%. What do you think, for the people that do say yes, that you have worked with, what do you think is the biggest reason that most people will say, yes, let's do it, let's move forward with this?
I think there's 4 reasons. First one is that they see the tax savings that they have, because if I'm paying an interest payment of $100,000 versus $500,000, most insurance is funded with after-tax dollars. That's going to be a tax savings right there. And then the growth of it is tax-free, so that's a tax advantage there. We have leverage. They understand leverage. Most people with high net worth have leveraged something to probably get to where they have to. So that's they understand. Then is the retained capital. That if I can provide this with 20% of the cost, use your other 80 to keep doing what you're doing, So we're allowing them to not liquidate other things to do this. I mean, it's part of their plan. And then lastly is that you have a higher internal rate of return when you're using discounted leverage dollars. If I'm earning 6 and it's on something I only paid 20%, I mean, I have double-digit IRR on this stuff. So this is why they do it, Karl, is because they say, wow, this I can see is a high and best use for that amount of money I want to do, and it makes sense. So,
Yeah.
But that's what I love about it. Explain, educate. If they want to do it, great. If they don't, they don't.
And if people decide that they don't, let's say you're meeting with someone, $10 million net worth, what's the biggest reason you see that they're not willing to move forward or try something out?
Some people just don't like that, right? They don't, and I don't want to fight people on that stuff. They don't like that, right? You're not going to change that. I'm not going to change the world, but that doesn't mean that it's not a good strategy and what they're thinking is bad. It just doesn't fit for them, right? But the point is what I tell advisors when I'm working with them is that if you allow me to present it and they say no, guess who they're saying no to? They're saying no to me, not to you. And then I'll say, Karl, figure something else out to do with this client, and it doesn't impede or have their relationship tarnished at all because they're saying no to me, and they just move forward. That's why being part of a team makes a lot of sense. So I tell people, introduce me as part of your team. That all I do is this stuff.
Yeah.
On this type of transactions, I have this part of my team work on.
Yeah.
That's it.
There's different aspects that make this whole project come together.
It's kind of like we talked about earlier, like that family office concept.
Family office stuff, exactly.
When people have more money, they usually have more advisors, right? So you have to be part of that advisor team, right? I mean, and that's why I like the family office. You're doing the investments, you're doing the real estate, and then if you have that, I think it's important. I tell agents when I meet with them, most of the time they're going to say, oh, I need to talk to my attorney, or I got to talk to my CPA to see, like this. And I tell them because what did we say earlier? This is for the 1% or the 2%, right? So I tell them, I said, listen, when you go to your CPA, just remember, if their business is based on the 98%, to do tax returns, all the other stuff, they may not have heard of this strategy.
They've never heard of it.
That doesn't mean it's bad. Because most CPAs, if they don't know something, they're not going to say, they'll just say it's bad. This is bad, because they don't want to look stupid, right? And I get that. I totally understand it. But the point is that if your CPA says that to you, that doesn't mean it's bad. And Karl, I do that purposely because they're going to talk to their CPA, and the CPA nod is one of the most powerful things in the world. If the CPA says do it, they're going to do it.
Yeah.
If he says don't do it, they're not going to do it. So you have to coach them a little bit and say, look, they might not say it, but that doesn't mean mad. That just means that maybe we need to have a conversation with your CPA and explain to them how this works. Maybe they like it, So just be aware of that.
Love that. Yeah. It's crazy. One of the greatest enemies for success when you're looking to level up are going to be the eyes, the ears, the opinions of other people, right? Especially when those people have no clue what it is that you're trying to get into because it's not the world that they're in.
I mean, I like that because that's the facts that we're in, is that this is a decision that you have to make on your plan. That's why I tell advisors to let your client make the decision on what they want to do. Don't, in your mind, say this is what he should do or whatever. The first presentation is just showing them the concept. And usually what happens is like, wow, this is interesting. Let me see what it looks like on me. And then you design it for what they want.
What have been some of the most impressive or the bigger deals that you've seen happen?
The philanthropic one that we talked about earlier, I mean, that agent made over 7 figures on that, one case, one design. I mean, that was pretty cool. I have CPA practices that allow me to just present for them, and it's generating 7-figure incomes for their firms. They just happen to know people that have money, and then this strategy makes sense for them, right? So so I've had a lot of partnerships like that where I've created these revenue streams for advisors. I feel like some people work in that space and they have a lot of people that they know that have money. I think that's pretty rare, right? I mean, but I know that every agent has a couple people that have money, and so we help them too, right? I mean, so this is all we do. We focus on this strategy, and I'm an advisor just like the other advisors that I work with, but the only thing I'm going to talk to them about is this. I'm not talking about other things, investments, other things that they deal with you. That's your world, and I just keep them informed and help them inform them on this strategy alone. So
the riches are in the niches,
Yeah,
right?
yeah,
That's what they say.
yeah.
You got to focus on what you do.
And
what
I
you
think
do
that's
best.
a super true statement, right? I mean, because when I said I can't do anything else because this is what I do, and that's hard because there was clients that I had that weren't candidates for this. So I still talk to them, do other things with them, but you slowly get them into saying, okay, here, work with this guy or work with this because they're going to watch markets and do the things because this is what I am doing now. So.
No, I think it's great. And, the phrase comes out. It's like, okay, jack of all trades.
Master of none.
Master of none, right?
Like my goal was like never to have to say no to a client that I could do everything, right? But at some point in time, you say, okay, if you really focus on what you're uniquely gifted at,
Yeah.
and you just spend all your time there, it's a game changer.
It
It's
is
a game changer. Yeah.
That's what I'm a fan of too.
Yeah, and I did that in my business coaching, and let's figure out what your unique ability is, and then we want 80% of your time spent there.
Exactly. No, so 100%. I'm a huge believer of that. You have to learn focus, right? And it's like when you're too scatterbrained, that's when maybe you have more experiences, maybe you learn different skills, but you're not a masterful entrepreneur with any of them, right? And the people are only looking for the experts at the end of the day. You mentioned it earlier. People that are going to look to get in this world of premium finance. How do I put in $100,000, have the bank put in $500,000 a year so that, I could retire with this much money? You're not going to go talk to someone who's dabbled in that, right? You need someone who's lived this, who's done this year after year after year. They've done with all types of clients. They've seen it go left. They've seen it go right. They know exactly what can happen and when it's going to happen and how it's going to happen, and they can protect you in any situation.
Yeah, and I think that when you're like that, then I wholeheartedly believe in this. I can help people do this, and this is what I want to help them do. That's what I'm passionate about. But I get a lot of excuses on stuff, but you can't let people hurt themselves, I guess.
Yeah, and that's what being an advisor is all about, right? You have the experience, you have the knowledge, you know how to get it done, and now we have a fiduciary responsibility to guide them through this whole process, even when they're blind and they don't know. Because I say, if you're going to have the high 1%, you're going to have the top 2%, top net worth individuals, who do they want to deal with, right? They want to deal with someone that's a master of the product. They want to deal with someone that mastered this subject. The same way, the person you want to listen to on the radio or with music is not the person dabbling in music, but the person that is the master of this trade, okay? If you're going to go watch a basketball game, you want to see LeBron, the reason people pay all types of money to see LeBron James or Michael Jordan, he is the master of one. People only want to do business with the experts, and you have to commit. And this is my message to everyone, no matter what project or business or industry you're in, you have to commit to being in the top 10% of your field. I learned this from Brian Tracy. And he says, if you're not even committed to being in the top 10%, if not even 1%, but the top 10% in terms of knowledge, in terms of experience, expertise, in terms of skill, he says you're in the wrong field. You're doing the wrong thing. Right?
But then when you're in it, you have to spend time in it, and you have the rules of like 10,000 hours, all these
That's
other
right.
things, right?
That's
I mean,
exactly
so
right.
you can't just you say I'm an expert and you don't do it.
No, you have to pay your dues.
Yeah.
You have to put in the 10,000 hours. For instance, I've been now doing insurance for the last 6-7 years. I haven't come close to anyone that's looking to, I'll contribute $100,000, $500,000, $1 million per year into a plan. I haven't found anything like that, not even remotely. But it also makes sense to the fact that I don't know as much as you know. I haven't been experienced in the same ways that you have. I haven't dealt with the type of people that are dealing with the types of problems that you're dealing with. My customers are dealing with the issues of, I don't know how to get myself to save enough money that I could even put money away. And allow myself to earn a return on that, right? Totally different.
And some of the people we work with, I have the same problems as those other people. They're just bigger.
Yeah, there
you
you
know what
go,
I mean?
right?
So people are people. That's what that you've probably learned that in your coaching. That's what I told you about when I was in my coaching. It was great because once a quarter I'd be with all entrepreneurs in different businesses, and we have the same issues. Just different businesses. We have the same issues.
Yeah.
And it was great just to talk about it and try to figure out solutions, because talking about it is one thing, but that's what we have to do is figure out solutions, right? I mean, and how to move forward.
Yeah, absolutely. Yeah. Like-minded people going through the same thing. That's where the connections happen. And then magic happens, actually. I wanted to ask you this earlier. So I know that you flew into Miami. You asked me, where's the nearest Ritz-Carlton? I was like, okay, baller, okay. And we got you there. Is there a reason you prefer Ritz-Carlton as opposed to any other, like, why not Marriott? Why not Hilton?
I don't know. I mean, I think you just get used to certain things. And to be honest, Karl, is that when you go to these places, the service is different. I know that, that earning money is great, but if I have a good experience and good result, that's why you go to places. I mean, these people take care of you. That's how they're trained to do, right? Yeah. So I don't mean to do that from a standpoint like, hey, I got to be in this. But if I'm there, I know they're taking care of my family. It makes the experience enjoyable.
Absolutely. Yeah. You know the number one hotel in the world, the number one brand?
No.
Ritz-Carlton.
Yeah.
Yeah, and it's not even close, right? A lot of people I ask, Marriott. Yeah, Marriott. Oh, no, the Hilton, whatever that. No, Ritz-Carlton. They've been number one in every single category for the last 30 plus years.
And they train their staff, with the gentleman, it's
yes.
just gentleman, whatever that,
Exactly.
Now I'm butchering it. but look at it, treat other people like you want to be treated, and then take care of them. And if they have a problem, solve it. On the spot. They allow their employees to have a budget. Call me if it's more than this. If not, just take care of it.
Yeah, I had no idea. And last time we've actually taken a trip with our friend Jason, we ended up doing one of the retreats for top producers was at the Ritz-Carlton. And we're at the Ritz-Carlton, and that's where I actually learned the whole phrase and saying. It's ladies and gentlemen helping ladies and gentlemen.
That's it.
And I was at the Ritz-Carlton, and then I lost my headphones. And I was leaving, and I was like, man, I just had this thing. I don't know where this thing is. And they said, don't worry about it, don't worry about it. I said, man, I can't survive without my headphones. I need my Apple Pods. Pods, is that what you call it?
Yeah, earpods.
Earpods,
yeah.
Thank you. So I'm like, I can't survive without my earpods. And they were like, sir, don't worry about it. We have a budget, we can take care of this. I was like, what do you mean you have a budget, you can take care of this? They said, listen, we're allowed, we have a certain budget, we can take care of this. If we don't find it, we will get you a new pair, we'll send it. I said, no freaking way. I couldn't even believe it.
Yeah.
And they mentioned that stuff like this happens all the time. They mentioned that one time someone lost a laptop. They were traveling for work. They needed that laptop for a specific meeting, this and that, blah, 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 to FedEx it so that it was like the next day. I don't know, it cost like a few $100s or something like that. I don't know, for the laptop. They were going somewhere in Asia. And they were like, yeah, don't worry, we'll cover it. And he's like, how much do I owe you? You don't owe us anything. We sent it. We got it to the shipper, overnighted it. The person got their laptop so they could do their presentation somewhere in a different country. I mean, that to me is...
So where are they gonna stay the next time they get it? Hotel room, right? I mean, that's what they do. They're not dumb. I mean, that's what they do. I mean, they treat people like they want to be treated, right? Same with our business, is that if we can get a good experience and we get results, if Karl has another person that wants to do this premium financing, I'm hoping they're going to call me. You do have to use someone like me, but you don't have to use me. So I have to be good, and I have to be able to present and help people and get results so they can take care of whatever they need to take care of, right? So, and I think that if all your partners are making money when you're doing transaction and you're doing the right thing for the client, and they love it because numerically it makes a lot of sense, it's a good business model.
It's a great business model, but it's also a great business model not only for the client, not only for you, but also for other agents. See, the thing is, you don't have to be the expert. And one thing I'm gathering from our conversation here with how you have this whole deal set up is you're the intermediary between the banks, financial institutions, the financial agent, and the client.
Right.
You're right there at that center, bringing everyone together.
Yep.
Where another agent that's already dealing with a client, that already has the trust, the respect, the authority, they're guiding client with other products, can just bring them to you. You would basically explain how this works. You'll be the one to help set them up. You'll be the one to get the banks involved. You'll be the one to get the insurance companies involved. They just approve and authorize at the end of the day. If they agree with it, they move forward. And now you have, like the example, that agent that made 7 figures with you. Was it 7 figures on one deal, or seven figures on one deal working with you?
Yeah.
That's powerful.
Yeah. It was powerful. It was great. And it made sense for the client, I mean, which is always the number one thing, but it made sense. And when you have work with higher net worth people, their budgets are not the same as our budgets, right? I mean, they can do things, and that's why they want strategies and things that are different and unique. That's where I think working in this, I found that you just have something that's unique to offer somebody, and it makes it a different experience. But you have to know what you're doing. That's the one thing. I mean, if you don't know what you're doing, I mean, that doesn't work well in the high net worth space.
Yeah, for sure. I mean, you're dealing with high net worth individuals. My experience, very low patience, especially for like ignorant mistakes or when things just take too long. These guys want things fast. They're making moves, they're making decisions, they're leading teams, they're building companies, they're taking risks, they're doing whatever it is they're doing. And, whoever it is that is working with these guys, $1 million net worth, 5 million, 10 million, 20 million, 50 million. These guys are like, your job was to do this or bring this to the table. Let's do it as fast as we can so that we can just keep things moving.
So I think that's what our role is. Like, we want to do the Ritz-Carlton role, and we'll move forward. So those are the little things that you learn over time, but it's a convenience market. They don't have a lot of time. Because I'll have people say, Dan, I got 15 minutes.
Yeah.
That's it.
Yeah.
And I respect it. So let's get straight into it. And, we're done past the rapport stage. Let's go and move. And then we have to help them make decisions. But we have to make it convenient.
Yeah, I agree. I was working with a different business with Jason and our business partner, Carlos, right? Jimenez. And the first direct sales company I was working with, I spent 10 years, 10,000 hours getting my way to the top of that company, doing all the stuff. I knew every presentation, how to do it, when to do it, like back of my hand. And I knew how to network, right? So I started helping people have success and started networking my way to higher levels of people, just better caliber people in general. I worked my way from a guy who was managing a big fancy hotel that introduced me to the VP of a different hotel that happened to be Trump International Hotel here in Sunny Isles Beach. Then he introduced me to, surprisingly enough, the developer wasn't even Trump, right? Trump just basically licensed his name for the deal.
Yeah.
But it was a guy named Gil Deser. And this is a big real estate mogul down here in South Florida. He's buying up all the real estate by the beach, building up hotels. He built, I don't know if you've heard of it, but Porsche Tower. This is where basically he's a big Porsche fanatic. But when they built it, it was like $4 million was like the bottom. Like that was your studio apartment on the bottom floor, which was nuts. But people drive their luxury cars in. It has an elevator for your car. You can actually drive it up to your unit. You park it in. It has an all glass garage. So when you park your car, you actually walk through that door. Now you're in your living room. And while you're in the living room, on one side you have the ocean. And on the other side, you have your luxury cars in your fancy garage.
See, but like,
Insane.
I mean, you going through that process, I mean, when you're in this world, I mean, you get to meet some neat people, right? And
Yeah.
But when I look at what you just said is that, okay, this guy created this experience that demands the pricing that he's offering. So you can't demand that pricing and not have
That's right.
So
Yeah.
you got the ocean, you got, I mean, so he's
Doing all
he's
this crazy stuff.
creating the vision for these people, and then some people that's like right up their alley, right?
Yeah.
But you don't have to have everyone. You just need some.
You just need some.
Right.
Now, to go back to that story, the kicker here is just to mention what you were talking about with time. These guys have like zero time. They don't like to waste time. I went for a presentation to see if I could sign up their phone service for the whole hotel. But I walked into his office. His VP finally set up the meeting. I walk in, and the guy's sitting there, and he's got paperwork. He's signing some stuff. He says, grab a seat. He says, you have 15 minutes, and if you're wasting my time, I'm throwing you out the fucking window.
Yeah.
Verbatim exact words.
Wow.
And I'm sitting there at the penthouse meeting him in his private home office, right? And he's like, listen, I don't know who you are, why you're here. A lot of times, it's like, okay, let me see what it is. I'm skeptical or whatever. He's like, no, you waste my time, I'm throwing you out the fucking window. You shouldn't even be here.
Yeah.
Which was nuts.
Yeah.
So I completely agree with what you're saying. Yeah, you have a high net worth person, you have an important person, a successful person. Get all the tedious things done. Show up. Here's what it is. Let me just review and touch on this. Do you approve? Yeah. Signature. All right, let's move forward.
Yep.
And that's how they move.
Yep.
Yeah.
Yep.
Man, I'm excited to do some big deals with you down here in Miami. We have a lot of people that are making big moves. I mean, Jeff Bezos just moved down here. He's moving his Amazon operation, opening up whole new headquarters and all that stuff. High-level executives, a lot of movers and shakers, big-time
No,
entrepreneurs.
I mean,
coming
in a
down.
lot of the studies is that this area is really, really prime and growing in the finance world
Yes.
in Miami.
Yeah.
It's a lot of people moving here.
A lot of people moving here.
Yeah.
Fintech, investors, all of it, So this has been really awesome. And as we come to a close here, so, you've been doing some amazing things. You're working with clients, you're working with agents. It seems like you're just trying to bring everyone together, help everyone create even more success, which is what we're all about here with Next Level. But you're doing talks, you're traveling the country, you're here today, you're gone tomorrow, right? What is next for you? What are you most focused on?
I think that, at some point in time you come to the fact that it was interesting is that when I did this interviewing at these insurance companies to get approved as an intermediary, Karl, they asked me a question. They said, Dan, we love what you do. But if you get hit by a bus, what happens? And I didn't have an answer for them. So it really got me focused on succession and trying to figure out, okay, how do we do it? So now my goal is to pass that knowledge, get it out of my head, get it to other people. And we can do all these things through this type of stuff and get the message out. So my goal is to grow it and have a team and to be able to expand, getting the message out. But I'm really strategic on who I want to work with and who I don't want to work with, because I just, like the guy, not as brass as him, but I mean, you want to work with people that want to make things happen, and if you can help them, that's awesome. But I don't want to work with people that don't want to do anything or don't want to work and just, and so right now with certain individuals, then I'm doing events with them, helping them out, and I got to go to New York next week. I got an event in Texas coming up, and then, I'll come back down here to help. I'd like to do an event with you guys, but, just getting the word out, Karl, I think is important. Yeah.
So one thing I'm looking forward to is we have events that we do, right? Every month we put on networking events. We do entrepreneur workshops for people that are looking to grow in the areas of leadership development, business growth strategies, and financial planning.
That's great.
And we want to definitely have you come in for one of the financial planning segments, because I feel like if we can put you in front of an audience of 50, 100, 200 hungry, ambitious entrepreneurs, they would love to hear what you have to say.
I'd love to do that. So you figure out, let's figure out a date and do that sometime this year. That would be great.
Very good. Yeah. So we'll definitely set that up.
Yeah.
We'll announce it. For those of you guys that are watching, you'll have a chance to be able to get registered. It's going to be a great chance for them to meet you, see you in person, rub shoulders, ask questions.
Yeah.
And on the other side, for other people that are working in the industry, you're working with clients, you're looking to provide them the right options. What else can you do for those guys?
What I usually do is they get in contact with us through our website or our phone call, and then what I like to do is walk them through my process to start off with and saying, here's how I do it, right? And then as they have opportunities, then we just connect together, and then we design programs for them and do a call with their clients. And the great thing about it is that, like, it's 30 minutes. So we'll provide those services to have conversations, and then that's all I want to do.
Yep,
same. That's my passion. That's my world.
Yeah, I think there's a lot of value you can bring. That's great.
Yep.
So thanks so much for that. I have one final question for you.
Yeah.
For anyone, entrepreneur, professional, sales leader that is out there that's really trying to make this year, 2026, their greatest year yet, what's one piece of advice so that they can create their greatest year yet?
I think we talked about it a little bit earlier, but I think all the things that we do as entrepreneurs and really honing down to the things that really generate the most revenue and spend 80% of your time doing that.
I love that.
Yeah. So.
All right. Well, Dan, thank you so much for taking time with us here today. We appreciate it. I think the people listening are definitely going to become better for it.
Yeah.
So, ladies and gentlemen, you guys heard it here first. If you found value in this, make sure to subscribe, because we've got a lot more content with a lot more professionals, with a lot more tips that are going to help you elevate your business, your finances, and your life. Make sure to give Dan a follow. All the information is going to be in the show notes, so you guys can make sure you get in contact with him. You can follow him on all social platforms. So thanks for spending some time with us. Until next time, be great, take care, God bless. We'll see you guys soon.